Welcome back everyone, and I have another video for you guys, and it's all things regarding Sunbury. Now Sunbury is a location northwest of Melbourne. It's about 40 minutes drive away from Melbourne, and it is a location full of potential. And now with a lot of Melbourne starting to rise in value, Sunbury is a location that has definitely picked up steam over the past couple of months, and I wanted to break it down for you. And so like always, the first thing we are going to do is look at the data behind it, because as we know, data is a great indication of where the market is moving to. And if we have a look at it, the median buy price is $841,000 with a yield of 3%. Now I will touch on that because there are properties to be found for around the $650,000 mark, and I will show you an example of that. And when we start to look deeper into the data, we can see it has a population of around 40,000 people in that location alone, and we can see that prices have started to increase with the positive price movement over the last month and a quarter change of around 1.2%, which is really good for us to see as an investor. And as we start to scroll down, we can see the median rents have risen about 3%, which is a good sign to see. It's not perfect. We try to aim for 5% and above, but obviously these are trade-offs to be made, and 2.73% over the past year is not bad at all. And when we start to look at the socioeconomics, this is why Sunbury becomes a really good suburb to invest long term. We see the ERSAT score at 6 and a rented to owner occupier ratio of 20%. So it's a very owner occupier friendly location. It's not like these small regional towns which have a very sometimes high rented to owner occupier ratio. Some have low, but a lot of them have high, and a very low ERSAT score. While Sunbury has both a high ERSAT and a very low rented to owner occupier ratio. And the other really good thing I like to see about Sunbury is that its affordability is very close to 35 years. And when you look at the median buyer price of $841,000 and we see the affordability of 35 years, we can assume, or we can indicate, that the people in those areas have decently high income, which allows for prices to grow further. And when we start to look further into the data, we can see stock levels are dropping, and we look at the trends, we can see the last few months inventory and stock levels have started to plummet, which is good for us as investors because that can indicate capital growth in the near future. One thing I am a bit uncertain about is the days on market, which has relatively stayed stable around 34 days, which means the properties are still selling within a month. However, I expect that to improve over the coming months. As we know, data does lag, and from on the ground and on the boots, we know that agents are buying there, we know buyers agents are there, we know investors are also looking in that area. Now, there are a couple of red flags that I do want to point out straight away. Number one is the vacancy rate at 3.44%. Now, vacancy rates are a little bit high. It's not great, but it might be a trade-off if you are looking for capital growth. And we can see vacancy rates are starting to come down over the last few months, which is good to see. And the other major flag that you will notice on this page is the building approvals, which is 394. So as we can see with Sunbury, there is a lot of vacant land throughout this location. You know, it's not particularly connected to Melbourne, even though it's only about 40 minutes away from Melbourne. You can actually see that there is a lot of vacant land. And we know that there's about 400 new houses coming on. Now, there is a caveat to this. Over the long term, with so much vacant land, there is always a possibility for new houses to come online. And I will touch on that a bit later in the video. But over the next 1 to 2 years, it will still take a lot of time for those 400 new houses to become actual homes. And in the next 2 to 3 years, there is money to be made in the short term. So you may wish to trade that off. Obviously, there is a risk, but when it comes to investing, there is always risk. There is never 100% surety, but there is good opportunity there. And if you haven't, guys, go subscribe to the private community. We have over 300 members, and it's literally only $35 a month. It's an absolute no-brainer when you're buying a $500,000 to $1 million asset. We have over 51 reviews for you guys to go have a read of and understand and see how we can help you, because it is an absolute steal to get private mentorship, access to community, access to location, and access to deal vetting for such a affordable amount. And we also have a 30-day money back guarantee, so you have nothing to lose. Go check it out, go subscribe, be part of the investor community, and we will help you into your next property. Let's get back into the video. And before I go any further, for those of you thinking, wow, Sunbury is a location that is quite far away from Melbourne, yes, it relatively is when you look at it on a map, and you can see that it's quite distant from away from everything. However, it does take about 40 minutes to drive with tolls to Melbourne CBD. And the other thing is that it has excellent public transport, right? You have about a 30-minute train ride with the V line and about 40 minutes via metro, right? So it's extremely accessible to the city and vice versa. So people living in Sunbury can work in the city, and honestly, affordable 40-minute train ride, if you ask Sydney-siders, is absolutely nothing. So in that aspect, I don't want you guys to be too concerned about it. And we should also go more into the dynamics of this location, right? You don't actually have to leave Sunbury to access most stuff. It has its own shopping center, it has its own Target, it has its own Bunnings, it has its own indoor center, it has schools, it has dealerships, all within the space of this large community location. And that's why Sunbury does have a lot of value in it as well. Apart from being owner-occupier friendly, having a high ersatz score, great affordability, it has all the right aspects we look for when we're looking for our own principal place of residence, which makes this a lucrative opportunity as an investment. But let's have a look at an example of a property. Now, I've taken this one here, 81 Charter Road in West Sunbury. If I just put that into here and I have a look, right, we've got this location about here. And when we look at this property, it's around $636,000. It was sold on 3rd of August, so not that long ago, right? It's very recent, and you can see it's in a beautiful home. It's decently renovated, nothing too flashy, nothing too modern, but it is a great home on a great piece of land, right? Good sized bedrooms and everything. And so this one was sold for around $650,000, which is very, very affordable. And when you look at the rents available for a 3x1 and you start to scroll down, you can see $500 for it. 3x2s, you see another one for $460, and then you keep going down, and you can see another one for $500. So around $500 for rent. And so when you put these numbers into your property portfolio calculator spreadsheet, $636,000 at a 20% deposit is around $130,000, $35,000 in stamp duty. So total cash is about $170K odd to buy this property at 20%. At $500 rent, you're about 4.1% yield, which for Melbourne isn't bad, right? You got to remember, perspective is everything. There's a lot of locations where there's going sub 3%, so 4.1 is not too bad in Melbourne. And after all expenses, you'll be about $24,000 negatively geared before tax refunds, for example, or around $2,000 per month. And after tax, you will get about $1,200 to minus $15,000 negatively geared. Now, for those of you investing in Melbourne, it's very unlikely you're going to get positively geared, but this is not too bad. And when you're looking at capital growth over the next 1, 2, 3 years, that should offset that amount. And if it does grow to the average annual rate of 7%, we could be looking at a 900K property in about 5 years' time. So it has tremendous value for you guys to consider for a property like this. Now, of course, this is a dime in a dozen. You'll find properties all the way from around 650 to around 750 to even 850 at the higher end of like 4x2s, for example. But you have to do your research and you have to find the property that suits you, right? But Sunbury does have that opportunity. And I do want to provide you guys with even more information, right? Now, when we like to look at Sunbury, now, of course, you can see there's vacant land. There's Diggers Rest here, which has a lot of buildings. You look at the south, there's more buildings there. You look up north, there's more buildings there. Yes, right? And you do some research. They have a Sunbury South Precinct structure plan where new homes will be developed along this southern border or the southern part of Sunbury. Not only that, when you look at the north side near Landsfield Road up further north, along this corridor here, more new houses will be built. And you can already see aspects of it with cookie cutter style homes here, new roads being developed, and likely new homes will come across the borders of this location. Now, will that stop capital growth? It can. Over the long term, new houses can slow down price growth. However, in the short term, over the next 1 to 3 years, if you're buying a property in an established pocket, you will likely experience capital growth. Now, of course, do your own due diligence and do your own research, but I believe there's good opportunity here to be found. And one more thing I wanted to show you is when you look at the public housing, there barely isn't any public housing. The only bad pocket so far is the one next to the Target, which is roughly around here. And honestly, if you were to buy in pretty much any location in Sunbury, there is barely any public housing. So you may want to just confirm this with a property manager. But if you focus on the west side, middle of Sunbury, north of Sunbury, you're going to do pretty well. So I'm not too concerned from that perspective as well. There's only one other flag that I do want to call out here, and that is to do with this development of a waste to energy plant that is being built in this South Buller part of Sunbury, or you can say close to Sunbury, which may have an impact on noise levels as well as fume levels or toxicity levels, which could impact people's livability in the area. So far, it hasn't really made much headlines or hasn't been a big concern for people because I believe it's not approved yet. You may want to double check, and there's a lot of rejection going around it. So it's just something I wanted to raise with you guys. You can actually do further research into whether or not this is actually happening or not. But worth checking out. But overall, I think Sunbury is a great location to consider, especially in Melbourne when property prices are going, 750, 850. When you can find property for around that 650 to 750 mark, which is 40 minutes from the CBD, great travel options, very quick to get to the CBD. It's a great option. And if you need any more help like this, guys, go subscribe to the private community. It's an absolute no-brainer at $35 a month. I haven't increased the price, and yet I'm still providing amazing value for the community, and community members are helping each other out every single day. There's over 300 members. Go subscribe. It's an absolute steal. You'll be a fool not to. Thank you.